How can governance-related risks be mitigated by an active management style?
Well, first of all, governance is of course key to establishing the trust from the market in a country or in a company. And it's all about establishing whether the company as such and the management and the owners behind this company is a team that we would like to entrust our investment with. And in markets where the trust isn't there due to lack of rules or lack of governance, there is a risk that this particular market or company will have tremendous difficulties in attracting capital in a global competition for capital, which we see today, where global investors are free to invest basically in any country or company they wish. And it's really important to stand out and be well run in every sense. And for us as active investors, investing in many of these newer, perhaps more complex markets, the first step is naturally to analyze the existing rule set and try and identify gaps and deficiencies in the existing rule set, or where these rules are not clear enough. And based on that, then evaluate the specific company and see, is this a company and management team that we have aligned interests with, and how is that determined? What are the ultimate goals of the major shareholders, and are they congruent with our own? And in markets where the governance standards are simply not sufficient today, we can also work actively together with other investors or other international initiatives to actually try and influence those markets to raise the bar and to clarify the rule set in order to also attract this global capital, especially in times where investors are more risk averse, and of course governance is one key risk assessment. And on the company level, we can work actively through constructive dialogue with the companies on increasing transparency, publishing a clear and consistent dividend policy, or influencing the board composition to really advance the company in this international competition.
Is Capital investing into a new set of frontier markets like Saudi Arabia, Nigeria, and Pakistan? What surprises and issues do you expect?
Well, first of all, we have 17 years of experience of investing in difficult markets already. I mean, being on the ground in Eastern Europe and Russia for so many years, having seen so many different governance situations, both good and bad. And I think it's important to remember that we will have governance scandals popping up in every single market in the world, in developed, emerging, or frontier markets. And this will only continue to happen as long as the financial markets are run by human beings, basically. And I think what we can really leverage is our analytical skills that we've really developed from our previous experience, and use that to that framework and that toolkit to look at the new markets. Remind ourselves of the gaps and risks that are there in markets where the rule set is not as clear as in more developed markets, but also act as an active investors and inspire these companies to adopt best practice. And I think the biggest surprise may be on the upside, really, where these newer markets really see the purpose of having a strong rule set, that this is one key factor in attracting capital, and have already understood that stricter listing rules, a well-functioning regulatory body, transparency as such of the market really helps to attract capital when investors can choose to stay away otherwise, and to really market that market as being well-functioning.
Do you have a positive example from the frontier markets, one country in particular that you are impressed with?
I think we'll see many examples coming out of the active work when we invest in the companies, but I can already see now examples of these countries demonstrating a concern for their brand and their investability. The Nigerian Stock Exchange recently joined the Sustainable Stock Exchange Initiative, for instance, which unites 9 international exchanges in higher sustainability standards of the listed companies. Saudi Arabia, following accounting scandals, have immediately raised the issue of strengthening the rule set and clamping down on accounting scandals. So we can really see examples of these markets wanting to be perceived as well behaving, and I think we will see many good companies come out of them, but also be aware of the risks and stay clear of those companies where we don't feel confident enough with the existing rules or the existing management.